Mr. Diaz, you have a completely different perspective. Or maybe you have a multiple perspective because you started with Bitcoin, but then you're off to gold. And I'd love to hear your perspective on both, to be completely honest, is about as it relates to DCA and or, like Joel just mentioned, okay, you got to be able to use it.
Yeah, no, 100%. I agree with everything everyone has said so far. So to understand my position with gold and silver and cryptocurrency, Bitcoin, it comes down to the definition of money. What is money? There are multiple definitions. Like Mike Molina has 7 characteristics of sound money. But universally, with modern monetary theorists and Keynes and Austrian economists, we can agree on 3 things. First is a medium of exchange. Anything can be a medium of exchange: a piece of wood, lint, whatever, anything. Nothing special about that.
And
The second thing is a unit of account. So 100 pennies for $1, half an ounce, a ton. Anything that has a unit of account. So pretty much anything, right? You can make anything into a number or a fraction. What differentiates currency from money is the store value. Gold and silver for millennia has always stored value. During the time of the Roman Empire, an ounce of gold could buy an expensive toga. In 1913, before the Federal Reserve was created, $20 would buy you an ounce of gold. And what could you buy with an ounce of gold in 1913? If you wanted to, you could buy a top hat, tuxedo, shirt, shoes, pocket watch, chocolates, flowers for your date. What can you buy with $20 today? Maybe a decent pizza, right? But what can you buy with an ounce of gold? $2,650 right now. Well, if I wanted to, I could buy a toga or a top hat, shirt, tuxedo, shoes, pocket watch, flowers, and chocolates for my date. Because gold and silver is money. Everything else, every other asset, all cryptocurrencies, all real estate, have to measure itself against gold as a central monetary unit of which all assets measure itself. In fact, until Alan Greenspan sold out his Austrian economic beliefs, he was a sound money advocate. He tried to keep the inflation rate of the interest rates tied to the inflation rate of gold. But then he got all enamored with Wall Street, decided to bail them all out in the 90s, and we lost the true Alan Greenspan. But gold and silver is money. And what I do is I trade gold and silver into different assets. So I have digital gold and physical gold and digital silver and physical silver. And all other assets are wealth generating assets, whether it's income like real estate, where you have rental properties, commercial, that's income generating, dividends, annuities. These are all income generating. You want that. You don't want just to trade. You also want income in case you lose your job. You have something to fall back on, not just your investments. Then you have asset generating like stocks and cryptocurrency. I think Bitcoin is the greatest wealth generating asset in the history of mankind. I wealth cycle into other assets. When the election, I sold all my Bitcoin on September 17th because of the rate cuts. And then immediately after the election, I bought into Bitcoin, wrote it up 10K, and then sold it. I'm out of Bitcoin again. I'm waiting to see what happens. My long-term analysis at the monthly, weekly, daily, and charts show that Bitcoin's overbought on the RSI and the MACD. I mean, it has some momentum at the 1 year and the 1 hour and the 4 hour. So there's maybe some momentum there. But when you compare the MACD over the since Bitcoin was created, every single time the MACD and the RSI get to these levels, we have between a 65 to 85% drop in Bitcoin. I think it's overbought, but there's the Trump effect, which has baffled politicians and could baffle people in technical analysis. So maybe the Trump effect will push it up to 120 or more. But based on my technical analysis on long-term charts going from the top down to the bottom, we have a short-term window, I think, of Bitcoin growing. I'm out of it because I'm in wealth preserving mode, because outside of cryptocurrency and technical analysis, the fundamentals of the global economy is shit. I'm hopefully I
True
can see.
that.
Yeah.
oh yeah, you're not. Yeah.
Yeah, so I mean, the United States is 126 or 130% debt to GDP ratio. What that means is, let's say, assume it's a 130. For every dollar that we borrow when we print currency, we're only adding 70 cents to the GDP. We can't borrow ourselves into prosperity like we did in the 80s, where we were only like at 20%. So every dollar we borrow, we're adding 180% or $1.80 to the GDP. Now it's the opposite. Every dollar we're adding or we're borrowing, it's only adding a certain amount. So my DCA 100%. I DCA when I was buying Bitcoin up until September. I was DCAing every paycheck right into Bitcoin. Now I'm DCAing into physical gold and silver because what really freaked me out was the Hurricane Helene that destroyed North Carolina. They had no cell phone reception, they had no internet, they had no power. How could they buy anything? That was a big wake up call for me. I'm like, I need to start transferring a lot of my digital gold and silver and crypto into physical in case something like that happens. Natural disasters, you can't preppers. Somebody said something about prepping.
Yeah,
I'm not a
yeah.
I'm not a super prepper, but I got water, I got gas, I got a generator, I got radio. I'm ordering a ham radio in case shit hits the fan. Like I'm prepping and I'm have a decent amount of physical assets so I can transact in an economy.